Michael Burry picked a great time to short the markets as price came into a daily sellers level at 460 on the SPY and is now trading at 442. But did Michael Burry really bet on a downturn in the equivalent of $1.6 billion? I'm calling cap on that. Now, typically when Michael Burry make headlines, people listen, people are intrigued. He gained fame for his moves during the 2008 crisis, in which he predicted and then profited from a collapse in the residential real estate price as early as 2007. They call that the Great Recession. He was portrayed as a central figure in Michael Lewis's 2010 book, The Big Short, and then Christian Bale later portrayed him in the 2015 film called The Big Short. Before we continue with the analysis, let's look at this article. It's coming from CNN Business. Michael Burry of Big Short fame just bet 1.6 billion on a stock market crash. So Burry's making his bearish bet against the S&P 500 and the Nasdaq 100, according to the SEC filings. Burry's fund Scion Asset Management bought 866 million in put options against a fund that tracks the S&P 500 and 739 million in put options against a fund that tracks the Nasdaq 100. Burry is using more than 90% of his portfolio to bet on the market downturn, according to the filings. So this is where the cap begins. The S&P 500 and Nasdaq 100 have both notched big gains so far this year. They are up nearly 16% and 38% respectively. While one big payoff doesn't guarantee future returns, Burry does have a strong investment record. Traders following the investments disclosed by Scion over the last 3 years would have made annualized returns of 56%, according to analysis by Sure Dividend. Over that same period, the S&P 500 has annualized returns of about 12%. So going back to the beginning of the article, Michael bought 866 million in put options against the S&P 500 and 739 million in put options against the Nasdaq 100. Now, what is an option? It's the right, but not the obligation to buy 100 shares of an asset at some point in the future at some price. So again, an option represents 100 shares. So that 1.6 billion bet, that is the nominal value. Now it's tough to know how much time did he buy and what price level. But again, the 1.6 billion is the nominal value. And it's calculated by the number of option contracts times 100 times the value of the underlying security. So here's a quick example. ABC trades for $20 with a particular ABC call option costing $150. When equity option controls 100 underlying shares, a trader purchases the option for $1.50 times 100 equals $150. However, the nominal value of that option is 20 times 100, which is equivalent to 2,000. And that's the power of options. It provides leverage without putting up that amount of capital. You only need to put up a fraction to control a lot of shares. So going back to the analysis, and let's look at this daily sellers level a bit more. We're going to go to the weekly chart first, and as you can see, you have the moving averages still pointing up. So we are still in an uptrend, at least on the weekly chart, or depending on how you look at it, this is range bound, but the momentum is up. But On a daily chart, this would definitely be an uptrend. Nevertheless, the bias is to the upside. This is just a pullback potentially before the next move higher to retest all-time highs. Again, I wanted to look at that daily bias level on the daily chart. And this is the zone here. Had a drop in price, basic candle drop. Price came back not once, not twice, but a third time. And surprised that it held because the unfilled sell orders are in this area. That just means that this is a strong level, the 460 level. Now where is price going to stop and then reverse? It's hard to say. Alright, so here's the level that I'm looking at. See this pivot high to the left? You see this basing at 427. You see how price pulled back but couldn't get to that level? Price could potentially pull back another 20 or so dollars. So you also bought puts on the QQQ. This is a rather ugly looking chart. I'm just going to okay, what was I saying here? Alright, so I was anticipating the secular bear market to continue, but that didn't happen after price reversed and started making higher highs and higher lows. So I'm just going to take this off for now and we'll start from scratch. Now if price eventually takes out the all-time highs, this becomes a monthly buy level at 320. All right, let's scroll down to the weekly chart. We can see how price stalled near all-time highs. Let's go to the weekly chart. I don't really see any levels of interest. There's a lot of trading at this 350 level. Price should at least pause between 355 and 345. So that would indicate another 10 points. And that would be roughly a what's classified as a correction, 10% drop. So this is not a bad level to see if price can get to, at least pause and then reverse. This is where the 100-day moving average is also. Just want to go back to the SPY. And see if that's a 10% as well. So 10% drop would get us to the 200-day moving average. I think the Nasdaq will get there first if we see that type of pullback, as the Nasdaq has a higher beta. So things will be interesting. Michael has made several bets this year, taking some things off the table. He went long the banks and the regional banks, only to get out. I don't know. He's acts as a trader at times, but the whole world is paying attention to this trade that he's placed. I don't anticipate a market crashing. The markets are due for a correction, but Fed Powell is about to end interest rate hikes, and then next year he's going to cut interest rate hikes. So that's going to be very bullish for the stock market. Buy on weakness. You just got to determine what level you think price is going to turn. Thanks for watching. Subscribe. Please like the video.